Right, hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Can I get a quick screen check and mic check, please? Yeah, apologies for the delay in getting started. I believe there were some internet issues with FX Street, but we're all good and up and running. Thank you, administrator. Okay, before I get into the main analysis, it's not going to be a very long webinar today. It's not much going on. In addition to that, we've got NFP coming out on Friday, and I'm just to give you a background of myself. My name is Zaheer Anwari. I'm a long-term trend trader. I've been trading since 2007. I trade all the markets, foreign exchange, stocks, commodities. So I look across the board for long-term trends. Ultimately, what I'm looking for are low risk, high return setup. So if I find an entry point where the trade goes against me, I want to get out with as smaller loss as possible, typically no more than 1 or 2%. But once I'm in a winning trade, then I hold on to those trades for as long as possible, and I then repeatedly compound into a winning position. And that's then how I see good growth on a trading account. There's really two ways that you can trade. You can take multiple positions in a day. That's what scalping and day trading is about. Or you can take just a few trades a year and hold them for as long as possible. That's more in line with people like Warren Buffett, the turtle traders. I know Warren Buffett's an investor, but the philosophy is the same. He only takes a few positions and he holds and he compounds within an investment. The turtle traders, they were long-term traders. John W. Henry, Jim Rogers, George Soros, all long-term. Those are that's the philosophy that I have. Whereas, most private traders tend to go down the route of short-term trading. And as a result, say for themselves, short-term trading comes with a lot of risk and is not always as successful as it's made out to be. So, trying to look away from day trading, look at longer term approach is far more beneficial for us as private traders. Before I actually get into the main bulk of the webinar, if you like what you see today and you want to get involved in a more long-term approach, something that's, maybe a little bit more consistent, something that can be adapted around your lifestyle. If you're working a 9 to 5, then please check out this website, Trend Trader Pro /APP apprentice. This is apprentice training, and it's £99 for a month of training, and you get a lot with that. You get training, you get strategy, you get software, you'll be part of a closed community. There's a lot that goes into that, so please check that out. Okay, let's go into the main bulk of the webinar today. Just bear with me. I'm going to change to eSignal. Okay, administrator, can you see my eSignal, please? Yeah, okay, fantastic. All right, so let's quickly get into this. As I mentioned already, I'm a long-term trend trader, and as a trader, I use purely technical analysis. I don't look at news. In terms of news, as private traders, we're outside the institutions. The institutions get the news before us. They've already factored news into the market. And so by the time we hear it as private traders, that news is old. So there's no point trying to trade on news or trying to even copy the way hedge funds and institutions trade, because it's a false economy. You're trading on something that's already been traded on. So I tend to step back. I look at the bigger picture. I allow news to be factored into the market, and I simply trade the long-term trend. Now, when it comes to certain news items that I am aware of, I simply do not trade around that time. So NFP is coming out on Friday. That means from today onwards, I generally do not open any new positions. I may enter compound if I already have positions running on a particular trend and a good compounding opportunity presents itself. I may then take a compound. But if I'm not in a stock, or if I'm not in a currency or a commodity, I do not take any trades until Monday, when I'll reassess the situation. Now, the one thing to note about NFP is that it's just noise in the long-term trend. A lot of private traders are hyped up for NFP because it's, there's added volatility and there's excitement. But the only people that really profit from NFP are the brokers, because they increase spreads around that time, and most private traders lose a lot of money. And if a private trader does make money on one particular NFP, he'll probably go and give it all back the following NFP. So you're better off staying away from trading around news items and to focus on the trend itself. Okay, so let's start with the Aussie dollar, US dollar, and before I get into that, this is a typical chart setup of mine. So as a long-term trend trader, I need the right time frames: monthly, weekly, and daily time frame. Monthly is where I draw my support and resistance, highlighted by the green and the red tool. Resistance levels, support levels, these are all major pivot points. The pink lines represent the annual level, so that's the high of 2015, the low of 2015, and the closing price of 2015. Now, trading is all about developing an edge. That's what we want. In its simplest form, trading is simply about pattern recognition. That's all it is. People may group it or categorize it in many different ways, but ultimately, trading is simply about pattern recognition. What we need to do is become experts at identifying a particular pattern. The pattern that I consider myself an expert in is identifying long-term trends. Now, for me to find an entry point into a trend, I'm looking for an edge. An edge is ultimately a high probability environment or entry point where I have more chance of making money than losing money. But remember, this is all about probabilities. There's always a chance that that edge is not going to work out, and it's a fact. Not every edge is going to work out. That's why you always want to risk small, and you always want to have a stop loss. Make sure you have a well-placed stop loss. And what I mean by that is you want a wide stop loss. If you have a narrow stop loss, you're always going to be stopped out. Take a currency like the pound Japanese yen. The pound Japanese yen can move as much as, let's say, 200 pips a day. If your stop loss is less than 200 pips, you're going to get stopped out, and you'll get stopped out regularly, and it'll become very frustrating. And then what generally happens is that private traders don't use stop losses because they keep on getting stopped out, and then they blow an account because once a trade goes against them, they hold in hope that the market's going to reverse in their favor. What people need to do is be a little bit more sensible with the way they place their stop losses. Look at the average true range. Something like the euro dollar, maybe that moves around 50, 60 pips a day, 70, 80 pips a day, in which case you need to have a stop loss that's wider than 80 pips. As I said, pound Japanese yen is 200 pips. So you want a stop loss that's wider than 200 pips. Okay. So going back to what I was saying, trading in its simplest form is about pattern recognition. We need to find that edge into that pattern. That pattern will either work out or it won't. If it doesn't work out, cut your losses. If it does work out, hold. Hold for as long as possible. For as long as that edge is moving in your favor, keep hold, because ultimately that's how you're going to grow an account. In addition to that, that edge will appear multiple times within the same trend. So when you find your first entry point, the market goes in your favor. You'll then be presented with another edge, another opportunity. Take that edge again. Repeatedly take the edges that appear in a winning position. Never add to losing positions, guys. The saying goes, it's very simple. Losers add to losers. Winners add to winners. If you're going to keep on adding to losing positions, you're going to blow an account. Okay, so only add to winning positions. I hope this is all making sense. I'm just going to go to the chat box because generally, right, once again, there's no hellos. There's a lot of talk above me in the chat box, but apart from administrator, I don't really know who I'm talking to. So if you are listening in, could I get a quick hello or something so that I know that there's people out there and I'm not talking to myself? Okay. So monthly, weekly, daily time frame, watch list down the left hand side. So you can see I've got a very extensive watch list. Monthly has support and resistance. The pink lines represents the annual levels. If price is above the high, that's a bull market. If price is below the low, excuse me, let me rephrase that. If price is above the high, it's a bullish bias. If price is below the low, price has a bearish bias. If price is trading between the pink lines, I stand aside. That for me, there's no edge. On the weekly, I have the 200 moving average, which is the black line, the 50 moving average, which is the blue line, and the same on the daily. 200 moving average, which is the black line, the 50 moving average, which is the blue line. What I'm looking for is alignment between the weekly and the daily. So in a strong bear market, I want to be below both these moving averages on the weekly, below both the moving averages on the daily. In a strong bull market, I want to be above both moving averages on the weekly and above both moving averages on the daily. If there is any other combination, I stand aside. So let's put this all in summary. If you look at the monthly, price is trading between the pink lines. There for me is enough reason not to be taking this trade. If we look on the weekly, we're below the weekly 200, but above the 50. So we are bearish in terms of the 200, but we're bullish in terms of the 50. And on the daily, we're bullish in terms of the 200, but we're bearish in terms of the 50. There's absolutely no alignment on this particular currency. And we can see that just looking at the monthly chart. We can see that the trend was down, and now it's just there's a correction. It's come to some kind of resistance zone. You've got the round number 0.80, messy consolidation here, which has acted as resistance. We're now seeing weakness to the downside. If it clears this low, then that's when I'll start looking for shorting opportunities. If it clears the high, that's when I'll look for long opportunities. For now, we stand aside. Okay, let's have a look at the Canadian dollar. Okay, Canadian dollar, again, same scenario. It's between the pink lines. And so for that reason, there's not really an edge. I mean, if you look at price action from this point here, 2011 to 2016, that's a 5-year bull run. We've now seen a correction. Now, is this a trend reversal or is this just a correction? Has this come to some kind of support level where we're going to see a bounce to the upside and a continuation? Or is price going to weaken? Is this simply a correction in a downtrend? Is price simply coming back to retest 1.3? This was hold as a resistance and then weakness back to the downside. It's a little bit in no man's land. And for that reason, not one that I want to trade. It's below the 50. So we're bearish in terms of the 50, bullish in terms of the 200. This is on the weekly time frame. This is looking interesting, below the 200, below the 50. So that's looking interesting. If we look at the trend structure from this point here, you can see that's moving in quite a linear way. This is quite a deep pullback, but we've seen that move here. We've seen that move here. So even though this is just in 2 bars, this is nothing to really be concerned about. If we take a very useful tool that I have here, which is built into eSignal, is the regression trend channel. So if we click on the top bar and if we click on the low bar, you can see that price has remained within this regression trend channel up until today's bar. Now we need to see this bar close. If this bar closes, then this could be the first sign that we're in some kind of trend reversal. But we still have 1.3 round number. These tools are not as important as price action itself. So 1.3 is the level that if it breaks, then I would be a little bit more interested to know if this is a trend reversal. However, a real trend reversal is confirmed when it breaks the 200 moving average. Above the 200 moving average, you have a bullish bias. Below the 200 moving average, you have a bearish bias. So for now, this is nothing more than a correction. This is not an environment to be going long. You can see that the trend is down. So this is not an environment to be going long because this could correct and then come back down again. But as already mentioned, there's no edge on this particular currency. And that's because price is between the pink lines. The moving averages are not aligned on the weekly. And this has now broken the trend channel, the regression trend channel on the daily. So not a good looking chart. Let's go to the euro dollar. Okay, euro dollar, again, look, between the pink lines. If I open up the monthly chart, this was the last time I traded the euro dollar, a nice bear trend to the downside. So you can see that price fell 3,000 pips. This is what you call a trend. This is what you call a consolidation. And this is why you don't want to be involved in the euro dollar. It's a very messy looking chart at the moment. There's nothing attractive about it. It's between the pink lines. If we go to the weekly, the moving averages are not aligned. Bearish in terms of the 200. The 50 is acting as resistance in a bear trend. We want a price below. Like it is here. You can see it was below the 200, below the 50. This is now above the 50. If you actually look at the 50 moving average, it's flat. That's not a, when 50 moving averages start flattening out, that means we're in some kind of consolidation. If I open up the weekly, you can see that price is just going sideways compared to this trend. This is going sideways, and the 50 moving average is confirming that.
Hello,
And if
Zaheer.
you look on the daily, same
Hi,
thing. Look how
sorry,
flat the
can
moving
you
averages
share the
are,
chat, please?
telling us consolidation. If you actually look at price, it's very messy. It's just going sideways. Here it was a very profitable trend to the downside, and look how the 50 moving average acts as resistance. Yeah, so when you're in a good trend, either in a bear trend or a bull trend, in a bear trend, you want the 50 acting as resistance. In a bull trend, you want it acting as support. Okay, at the moment, this is just going sideways, and you can see the moving averages are just going sideways as well, confirming we're in a consolidation. Euro dollar, not looking very interesting. Okay, euro pound. Now, euro pound, the euro pound was one that I've repeatedly talked about on many FX Street webinars on a weekly basis, and we've been keeping an eye out on this. And that is because if I just open it up, we can see that price broke above the pink line high, and it cleared above 0.80, but I mentioned that we must wait for a close. We had the break, but we didn't have the close. The close actually happened below 0.80 and actually below the high of 2015 and below this level here, which is acting as resistance. But now what we can see is a correction back to the upside. If price continues to the upside and it clears this pivot high, then we've got room for this trend to move to the upside. So a little bit of patience, and we could then find an entry point. The trend is bullish here. The bias is now bullish because it's above the high of 2015. Okay, but we do need to see this continue to the upside. So a little bit of patience for now. If we go to the weekly, we can see that price was above the weekly 200 right there. So it was above the weekly 200. It was above the 50. Price corrected, but is now looking to push back through the weekly 200 and that round number 0.80. Remember, round numbers are not hard levels. They're zonal areas. So price came above it and came back down. That's expected because this is a zonal area. So this is what I mentioned about don't get in too early, wait for price to close. I also mentioned that usually what you're looking for is a retest of a round number and then the next breakout. Price came back to retest it and it actually continued. So this was a reason why not to take the trade too early. But if this continues and we get a break above this high, then we could see further movement to the round number 0.9, ideally to the figure 1. All right, so that is potentially a move of just under 2,000 pips. On the daily time frame now, you can see that we had a pretty big correction to the downside, but the trend is now heading back up again. Okay, if it breaks and closes above this resistance and these resistant levels here, then we could see further strength to this pivot high. If it clears this is where we can start looking for entry points. Now, the one thing to note is that this particular currency, it's quite messy. Yeah, pullbacks are quite deep. I mean, that's a fairly deep pullback. So it's not the easiest currency to trade. So you want to make sure that you have good stop losses if you're looking to trade this. Okay, Euro Japanese yen. Okay, I'm just looking at the I'm just trying to see this. Okay. Guys, can you see my chart? I think I've just come into the chat box. So is there a problem? No, everything's okay. Can I continue? Oh, you can see my charts or you can't see my charts. Oh, you can't see. All right. Okay. Well, how about now? Yeah. Can you see my charts now, guys? Okay. Well, I'm not quite sure what the issue is because I'm sharing the screen. Okay. Is that better? Okay, so there's obviously some kind of issue with Google Hangouts because it keeps on dropping my it keeps on dropping the screen share. Can you let me know what was the last currency that you could see, or have you been able to see my charts at all? You haven't been able to see my charts. Looking at the chat box, you haven't been able to see my charts for about 20 minutes. Oh man, you haven't been able to see any of my charts at all. All right. Now, is this an issue you've had the whole day, or is this an issue just with me? All right. Okay, so let's start with the euro dollar. Okay, so the euro dollar. Right. Can you see my charts? Can you still see my charts? Okay. All right. So here's the euro dollar. As mentioned, it's inside the pink lines. It's above the 50. It's below the 200 on the weekly, and on the daily, the moving averages are very flat. You can see that they're very flat. So because price is between the pink lines, there's no alignment between the moving averages on the weekly and the daily. The moving averages are very flat. That is why the euro dollar is not something that I particularly want to trade. Okay, so, and the one that I looked at before that was the US dollar Canadian dollar. US dollar Canadian dollar, again, price is between those pink lines. So while price is between those pink lines, I don't want to trade them. I want to see price either above this high, above 1.5 and above this high, or below the low. Okay, you can see also it's below the 50 but above the 200. There is no alignment. I want to be above both or below both, okay, not in between. And on the daily, we can see that price is now coming outside of the regression trend channel. So again, the US dollar Canadian dollar is not a very interesting looking chart to trade. If you look at the bull trend, 5-year trend and a correction. But is this a correction and then a reversal up, or is this a trend reversal? Okay, these are the questions that need to be answered. And right now, there's not a lot of information telling me whether it's going one way or another. So for that reason, I'm going to be standing aside. Okay, Euro Japanese yen. All right, Euro yen, we've talked about this as well several times, and I've mentioned that until it breaks 120, this is not really a currency that I want to be trading. If it clears 120, then we could see weakness to the downside. Okay, but until it clears 120, I'm not going to trade this. It's already trading below the pink line, so it's below the low of 2015. So we do have a bearish bias, but we want to see 120 cleared as well, because that is a round number. And if it clears this support level, then we could see weakness to the downside. Here's, you can see good alignments. So below the 50, below the 200 on the weekly, below the 200, below the 50 on the daily. But if you look at the trend, look how messy it is. Deep pullbacks, just not a very good looking chart. It's very ugly. What we want is a trend that looks like this. You can see this trend here to the upside. It's a much neater looking trend, especially this area here. A much neater looking trend. That's what we want. If you compare that to what we currently see, we can see that this is just very messy, very choppy, and you are going to get stopped out. Do you really want to be holding for long periods of time with the trend going against you? Yeah, you have to hold for 1, 2, 3, 4, 5, 6, 7, 8, a whole week before it moves in your favor. And it's not really moving very fast. So, you will make profit, but it's just not moving very fast. And for me, that's not a very good looking chart. All right. So, and the euro pound, I'll quickly go through that again because you guys missed it. Let me just go back. Guys, can you still see my charts, please? I don't want to repeat myself for the third time. Yeah. Okay. Okay, so let's just go back to the chart. So euro pound, I mentioned that we are seeing strength now to the upside, and we can see if I just open this up, price is trading above the high of 2015. We want to see further strength. If it clears this level, then we could see further strength to the upside. And we can see also now that price is heading back above the 200. If it closes above this level, clears this level, then this is where I will look to enter and see strength to the upside. On the daily, also now back above the 50 and above the 200. If this continues and the 50 starts hooking up, and if it clears this high, then that will offer an entry point. Just be aware of the way it moves. It's quite deep, it's quite messy, so make sure you have well-placed stop losses. Okay, let's go to the pound Aussie dollar. All right, pound Aussie dollar, you can see price between those pink lines. Good movement to the downside. We're having a bounce to the upside. It's not a trend reversal. This is just simply because price is reacting to that support level, which is the low of 2015. Okay, what we're looking for is resistance, maybe at the figure 2, maybe earlier, but we're looking for some kind of resistance. Correction to the downside. You've got pivot level here. Correction to the downside. If it clears this low, then we could see weakness to the downside. Okay. And if we go to the weekly, well, we're above the 200, below the 50. So we're between the moving averages. This is not what we want. What we want is price to be below the 200. And we want the correction to the downside and for price to clear this pivot support. So once price clears the low, once price clears the weekly 200, and once price clears this pivot low, this is when we can start taking shorting opportunities. For now, nothing to be trading on here. You can be going long, but at the moment, this is just pure guesswork. Okay, if you are going long and you're making a bit of profit, that's fine. But if you look at the long-term trend, it's down. This move is small compared to the overall move to the downside. So the bias is still very much with the bears. This is just a correction in a long-term bearish market. Allow for the market to dictate whether you're in a strong environment or not. Okay, pound Canadian dollar, same thing. Pound Canadian dollar has come to some kind of support level, 1.8, just below it, pink line low. Once it clears these levels and it breaks through the low, then we can start looking for shorts. I'm looking for a move like this. You see how it moved very, very quickly. If it clears the low, then I want to move back to the downside. Patience for now until we get that move. Weekly, well, between the moving averages, price pushing through the 50. Again, not any alignments. We want to see price below the weekly 200. We want a correction to the downside. We want the low cleared. Just a lot of reasons why not to take this trade. It's really in the middle of nowhere. Okay, this is in no man's land. We want to have a clear bias. At the moment, there is no clear bias on this. Okay, last currency we'll look at is the pound yen. Now, the pound yen, I've got positions running. If we open up the chart, you can see we've got weakness to the downside. We've got price trading below the low of 2015. So we've got that bearish bias. It struggled around 160 round number, but we're now seeing weakness. We'd like to see 150 cleared and then for price to ideally move to this low down here. Of course, we have this support level here, but I'd like to see price clear that and move to here. Of course, whether that happens or not is a different matter. That's how I'll manage my stop losses. But ideally, that's what we're looking for. Below the 200, below the 50, price came back to retest it. Weakness. What we're looking for is a break below here and a continuation. And on the daily, below the 200, below the 50, I've got positions running. I've short positions running since 180. These positions are still open now. And you can see how I've got multiple positions all running. The key to have a trading is really having a good stop loss that allows for these pullback periods. And we've seen a continuation to the downside. A break and a close below this level, and that will mean a continuation. But remember, we've got 150 just below that. So I'm waiting for 150 to clear before I start taking any more shorting opportunities. Okay, guys, those are all the currencies that I would like to look at. Those are the currencies that are on my watch list. Are there any questions before we end the webinar today, please? Okay, so no questions. Fine. All right. Well, if there's no questions, then I will just direct you guys to, bear with me 1 second. Okay. All right. So as already mentioned, there is the apprentice training. So if you guys want to get into trend trading, which you will probably find more beneficial to you as a private trader rather than short-term trading, please check out the following website. If you wanted a free ebook, please download this, trendtrader.pro/ebook. You can add me on Facebook, you can, of course, add me on Facebook, just search for my name. But we've got a Facebook page, which is here, facebook.com/the dynamic trader. And there's lots of videos on here. If I actually scroll down, yeah, there are a lot of videos that I've done. I've done some Facebook live recordings. So they're all on there for you to watch, covering just various aspects of trading. Please listen in. If you want to follow me on Twitter, @Zaheer Anwari. And if you're on Instagram, guys, please add me on Instagram @fx.mental. Okay, that's all my social media. Thank you all very much. I hope you're well. Ariel, thank you for the interaction. If you are out there listening, thank you all very much, and have a wonderful morning, afternoon, evening. Okay, guys, thank you. Bye-bye.